Ladies and gentlemen, welcome back to Apex Investor. This has been a long time coming. But basically, we're going to look at, we're going to do a new approach. And that approach is to stick to my guns. And what that means is, when I started trading decades ago, many decades ago, probably in the early 2000s, is that my picks would be solid. They would be based on not memes, not other people's opinions, but simply my gut instinct. I know it sounds a little risky or very risky, but these are stocks based on their reputation, their history. So I think you're going to see that with this video. So we're going to start with our first stock, looking at Twitter. I'm not saying Twitter is the most stable stock, but we're going to filter these to see what are the most likely stocks to succeed. In Twitter, actually, you can't trade, so we'll skip Twitter. Twitter is not public anymore, but once that goes public, that would be interesting to see the potential there if it ever goes back to being public. So we're going to go to the next one, and we're going to skip this because that is mostly meme potential there. Twinkie. Okay, look at Twinkie. So this is going to be a longer video than usual because, again, we're going to establish what are the best, most stable stocks that you can invest in into the long term, even in the event of what we have right now with this recession, depression, crash, whatever you want to call it. It's a horrible time to be trading right now. Okay, so looking at Twinkie, we're going to look at the last year. And we can see support. Okay, that's kind of annoying there. Right here, support is about $20 and below. Your safe bet is 19 to 20 for the stock. And if you want to be even safer, then go for $10. 10 to 11. 10 to 11, but in the long term, in the short term, you're looking at something like $19 to $20. Resistance for this is looking like 25 to 27. But Twinkie, I think, is a good stock going forward. Just look at the growth. It's one of the few stocks that has not gone down. It's stayed relatively stable. Just look at when all the stocks depressed at $10 in March 20. I call that the stock market pseudo crash or semi crash. That's at the peak of COVID. $10, about just above $10 for Twinkie. And if you bought that at 10, then you're making almost threefold in the matter of 2 years. So that's Twinkie. That's the first one. That's definitely an approved stock going forward. You can take a look at MMTLP. Not saying this is the most stable stock because it isn't even a stock really. It's a dividend. So we're going to look at that and see the activity there. I've been holding on to this. I know it's been up and down. I guess you can't trade it anymore. Okay. Interesting. So I guess it's been removed from trading. I'm not sure what's going on there. We'll take a look at that later, probably in the news video. Merck is a pharmaceutical company. I'm not so bullish on this, but we'll take a look at the chart. This is not a pick, but I'm going to just take a look at it and possibly remove it in real time. We're not going to do too much editing in this video. Okay, just let this load for a bit. So first one is Twinkie. That's definitely number one. Not saying it's the best one, but it is an approved pick moving forward and into the long term. And why is that? Because people love Twinkies. People love what they make, what they sell. And they don't just make Twinkies, but that's certainly their top product, if not one of their top products. And we got Merck. Oh, sorry about that. This is welcome back. Okay, apologies for that. Looking at Merck now. Oh, not even in my browser. Okay, Merck. that is at an all-time high. Wow, 112. Now back in 2020, 68. Again, this is not my personal choice, but I mean, this, you could go worse. You could do worse than Merck. So let's keep that on the list as an honorable mention. It's not in my personal list of stocks I would personally invest in and put my actual money on, but this is one to watch, to track, to see how the general marketplace is going. So I'll keep that on the list, but again, not a personal strong pick. This one is one of those meme stocks, IronNet. I did invest money in it, unfortunately, and I lost quite a bit of money too, so just ignore that one. Lucid, that's an interesting stock. I'm not going to say this is on my list of solid stocks. I guess we'll call them solid stocks for this video. The solid stocks. So first one is TWNK. Definitely a solid stock. It has a past history of being stable and being profitable. It's got the reputation. It's got the brand name. So it has a lot of things going for it. That's why I approve that stock. And this is really a video to sift through all the, not gonna say BS, but all the so-called meme stocks and even non-meme stocks. Okay. All right. So looking at Lucid Group, let's look at the 5-year. Once again, it opened at roughly $10, and the support looked like 17, but it's dropped very low to the $6 level, specifically 609. So no, it's definitely, it's not a pump and dump, but it's hurting. It's hurting right now. The EV industry seems to be hurting right now from its height of $55 in 2021. Will it go back up? Probably it might. But again, this is not on my list personally. I did invest money in this, but I sold it before it dropped that low. Not because I was smart, just because I kind of moved on to other things. So not on the list. And I'm going to put timestamps for the solid stock. So first, we only have one so far. General Dynamics and a lot of these military, industrial stocks, I did a video on these, and funnily enough, all those things came true because of the war in Ukraine. All these stocks ballooned. So if you went with this, you are very rich by now, because all these stocks are doing gangbusters. All of these, without exception. So I'm going to stop short of Metamaterials there. Metamaterials, I'm sad to say, is not one of the solid stocks. It does have great potential, but right now it's in the germination phase. It's still developing. It hasn't established its reputation. It's still trying to prove itself as a corporation, as a business. And that's fact. It's reality. All right, so this is just loading here. I'm going to pause the video, the recording. Okay, so welcome back. As I was saying, BAE, or BAE Systems. When I called this out as being a good pick, that was way back in 2021. 2022, 2021, it was probably around $20, 20 to 40, or 20 to 30, I should say, and now it's up to 42. So yeah, it's pretty much doubled since I called that. And this was before the war, when a lot of fear-mongering was going on regarding potential war. And war broke out, as we know. So is this a solid pick? The answer is no, it's not a solid pick, because war is not a guarantee. It's not like a seasonal thing where in the winter time, for example, gas prices go down, and then the summertime gas prices goes up or go up. The price of oil usually goes up in the summer. Price of oil usually goes down in the winter. And stocks related to coffee usually go up in the winter. Stocks related to coffee usually go down in the summertime because of the weather. It's just not as popular. So definitely not a solid stock. General Dynamics, again, another military stock. I mean, all across the board, they're not solid stocks because war is such a variable. It's not guaranteed, but if there is war going on, then these are safe stocks in times of war. So if World War III breaks out, yeah, go ahead, buy all these stocks. General Dynamics, BAE, Airbus, Boeing, Raytheon, Lockheed Martin, Northrop Grumman, etc., etc. Let's take a look at this from the last 52 weeks. Again, I called this last year. It was probably around 100 or 200 something, low 200s. But like I said, when it's not war, it usually goes down to 113. But during times of war, 200 plus. Okay, so that's General Dynamics. Airbus, that's the airplane company. Make airplanes. Airline company. Okay. 52-week range, 87 to 126. And so they're closer to the 52-week high. Taking a look at their chart. Let's look at that in the 5-year. Times of war, 116. Times of no war, times of peace, 49. That answers that question. Again, none of these are solid stocks. These are all in times of war stocks, kind of in case of emergency, break glass kind of stocks. The Boeing Company, 214, presently 52-week range, 113 to 229. Again, all these stocks, military-related stocks, are higher now. But looking at the last 5 years in times of peace, 95. But this has been up at 300 in the past. But this must be related to the airline industry, the tourism industry just being in a depression because of the restrictions to travel that still exist in a lot of countries that mandate people to have a certain medication inoculation in order to land. Specifically in America, they still have that. So if you're an international citizen, you're not an American citizen, you want to travel to America, that's impossible unless you have that inoculation. So I think that's what is going on, keeping Boeing depressed in their price. Raytheon, $80 to 106. Okay. And this was down at 51, so it almost doubled since then in 2 years. That's a long time to wait, I understand. Lockheed Martin, 365 to 498. So this one is just an expensive stock. But again, these are solid stocks in times of war, not in general times. This is not a generalized solid stock like TWNK is, where it's just good all overall. Because the big variable is there a war? 291 at the peak of COVID there. Okay, last stock for the industrial military related stocks, and that's Northrop Grumman, one of the biggest in that industry. 364 to 556. What's the market cap? 71 billion. So I mean, it's a lot of money behind all these companies. So yeah, they are solid stocks, but they're not, again, the solid stock that's perennially solid no matter what. In times of war, they are high. In times of peace, 235, and kind of stagnant for the most part. Okay, so that's all for that one. For those ones, I should say, Metamaterials has been the darling of this channel, but I'm going to have to put it down and say it's not a solid stock, because history has shown that in the last 5 years, it has not shown that it can be a solid stock. Look at that. If it was solid, it would have gone right back up to $5 and even $10. It did not do that. And that's partly the reason why I stopped doing videos, because this stock really did not take off. Not saying it never will, but it's been a long wait. It's been a long wait. So let's look at the last year, because it's been almost a year since the last video on this channel. So we can see it was at $2, kind of fluctuating between 145, 142, 120. Just could not break the $2 price for the longest time, just even under $2, I should say. Went all the way down to 66 cents September, and then exploded to $2.16. So that would have been the time to sell at the $2 range, looking at its history. And again, I'm not using any feelings or bias. I'm just looking at the charts. This has potential to break out, but it looks like there's so much selling pressure on this stock, to be honest. It does have potential, but personally, I will probably invest elsewhere in the meantime, because people need to eat and survive, and metamaterial is not the kind of stock that will help you eat and survive, unless you just have money to just keep locked in and not use for a long extended period of time. And it's probably better served just accumulating interest in a savings account compared to metamaterials right now. Sad to say, but that's just the truth. If you were to buy this at 60 cents to 70 cents, then yeah, you've got a good buy here in metamaterial. So that is the buy price for this stock. It's not a solid stock. This is a meme stock, but it is a viable business. They do have a lot of potential, a lot of different areas where they can make money, multiple avenues where they can do that. They can be profitable. So we'll look at the news regarding this stock and see what's going on there. At least they're above $1. I give them that, because if they were not above $1, they'd be delisted from the NASDAQ. So sell at $2, buy at 60 cents. So this is still a good stock if you're looking to, flip it. Buy at 60 cents to 70, sell at 2. Pretty simple. Kind of like our slogan up there. Okay, so we only have one stock that's solid. So one timestamp so far. Coinbase. Let's look at the last year. Again, this is the Bitcoin related stock. Unfortunately, with what happened with the, I think it's FTX, with the whole Friedman guy, just a travesty. I've been a victim of that with another Bitcoin trading platform, so I'm not surprised that happened and will continue to happen. Could it happen with Coinbase? Potentially, that's a potentiality, but because they are publicly traded, there's a lot more accountability to them to kind of be more honest and transparent about things. I'm not saying they are completely honest, but there's a little more accountability, I think. They can't just run away and fake their death, things like that. So $31 looks like support, but to be honest, I don't know. Bitcoin is so volatile. It is very volatile, and support is again $30 and probably below. Resistance looking like 80 to 90, but Bitcoin again very, very volatile, so not a solid stock. Okay, we're going to go through all these stocks until we narrow them down to a solid bunch. So far we've got one, and that's kind of Apex Investor 2.0 or 3.0. Going to my original strategy of stocks that are solid, that have a reputation, that have a history, that have brand and name recognition, that have a lot of use to human society and civilization. Twinkie does have a use to human society. It's a comfort food. Not saying it's the best type of food. It's not the healthiest, but it's still profitable. Roblox is looking not so good. Okay, we've got a $21 support, 82 resistance, but in the last 52 weeks, it's looking more like 50 is resistance. So no, not a solid stock, just because it doesn't serve too many purposes for human life. It is more of a leisure, pleasure stock. Eastman Kodak, we've got 278 support. So let's look, is this delisted? What happened here? I'm not sure if this is even listed anymore. Okay, looks like this is not listed, or the graph is just not showing up the chart. Okay, I'm not seeing any chart here. Let me just pause the video until I can work this out. Okay, welcome back. Yeah, welcome back. Kodak Eastman, or Eastman Kodak. Yeah, this is, I was gonna say it's a solid stock. It's kind of on the fence, because it is a meme stock, yet somewhat a solid stock. It's kind of a hybrid of both. If you look at the 52-week range, let's look at the 5-year. It has a lot of exploding potential here. Support at 278, and this tends to go up pretty steadily and consistently to at least $5 and $6. I mean, say you bought this at below $3 and it goes right back up to $5, $6. That's a lot of money. You're doubling your money here every time, and it does that very consistently. This is kind of like one of the stocks that go under the radar. So I'm gonna say this is a pick. It's kind of like on the fence, but it's not as solid as TWNK and other ones I'll be presenting in this video, but it is something of a hybrid. So I'll put this as a somewhat questionable solid stock, but it does seem to be predictable. If you look at the $6, yeah, if you bought this at $6, sell it at $12, but it's seeing new levels of support, because originally I thought it was $6, and then it went even lower to below $4, and then more recently below $3. So yeah, that's why I can't say it's stable with full confidence. Okay, next is Bitcoin, and I'm having some technical difficulties. Let me pause once again. Okay, so next we're looking at Bitcoin. Bitcoin, 15.5K or 15.6 thousand US dollars as support. I'm going to look at this very closely because that is certainly an interesting question. Is Bitcoin, does it have long-term longevity? Is it stable enough? And we're looking at the answer to that is yes. Surprisingly, I thought it was going to be no. As recently as November 2022, was down to 15.7. So if you can get this at 15 and below, good on you. And you can sell this at 20 and plus. Let's look at the last year. Yeah, it was certainly depressed from the previous highs of 50K and above, even as high as 60,000 US dollars. So this is certainly support levels here. Could be even lower, though. I'm going to predict it might go down to 10,000 to 15,000. But I think this goes back up. Bitcoin is one you cannot count out. So this is a solid, not so much stock, but solid investment. Just depends at what price you buy it at. So if you're buying it at 10,000 and 15,000, okay, you found support. But just be very careful with this, because again, I lost a lot of money in Bitcoin, not because it's a bad investment, but because of the instability of the trading platform I was using. So you have the Sam Bankman-Fried FTX and other disasters and tragic thefts that have gone on in the Bitcoin world, such as Quadriga GX or something. In Canada, you had the Mt. Gox incident in Japan, I believe. So millions and billions, actually trillions of dollars being lost due to the greed of these individuals, and really a travesty. They're not punished enough, to be honest. So steer clear of Bitcoin in terms of the stability of the trading platforms. If you are to buy this, buy it at this price, 15,000 and below, or 16,000 and below. Keep it offline. Keep it in a hardware, like one of those devices, like a Trezor or something like that, where it is in a safe. It's not susceptible to being stolen from you or just disappearing off the face of the earth because of Sam Bankman-Fried kind of people. And then you can sell it when things explode again to these kind of prices, 50,000 and above. So I am very bullish on Bitcoin, despite everything that's gone on. Just look at the last 2 years. Okay, and as recently as 2021 and even 2022 was up at 46,000. So this will go right back up. It just takes time, and it might take a new administration, a new president, and new policies in regards to America for these things to go up. And perhaps even a war to break out or a war to be won. Sad to say, things like that have to happen just for the stock market to recover. Okay, looking at AMC next. We've got 3 left, and then we're going to look at kind of the heart of this channel in terms of solid stocks. Okay, so now we're looking at AMC. AMC, okay. 52-week range. We got $3.77 to $34. So it has hit a new low as of very recently. In the last month. So very recently was at 3. This is sort of the reason this channel is coming back up, because the stock market is slowly recovering, and depends on the stock, but in a lot of ways it is recovering. 377. Okay, so we'll look at the 1 year 52-week range. AMC obviously is a meme stock, but it is also somewhat of a solid stock because the theaters are booming again. So I'm kind of surprised to see this isn't exploding more because of the Avatar sequel. This should be a lot higher. So this is being artificially suppressed. Clearly, because the movie industry is recovered in a dramatic fashion. So this should not be at $5. This is due to explode. Something is going on. I believe it's the short selling and all the tomfoolery going on. This should be at least $20. So something very sketchy, very fishy is going on. We all know it. We all suspect it, and it is. It's just happening behind the scenes. It should not be this low. So this is a strong buy. I can see that very clear as day. So if you bought this at $4 and below, congratulations. It's on its way to explode way past $20, or not past, but at least $20 and above, because the movie industry is doing very well in terms of box office and people going back to the movie theaters. So we got a lot of movies coming out recently and into the future from all sorts of movie studios. Very big movies coming out. So yeah, this is just a bunch of illusions. It's a wall of illusions. 377 to 34. Yeah, I see this going right back up to at least 20. Let's look at the last year one more time. Yeah, 20, 24. So this is a good sell at 20 and above, maybe even 30, but I'll say $20 just to be safe, because you never know if it'll just go to 20 and won't break the resistance there. But 2025 is pretty safe. And buying this again below $4 is a pretty good bet. And that was only this past week. It was only in this last week it was down to $3 and $4 and below. Back in last Monday. It was last Monday. So is this a solid stock? I'm going to say yes, it is. It's a meme stock, but it is a viable business. You've got AMC, one of the biggest movie theater chains in the world, in America specifically. So that is a solid stock. I'm going to put that right up there with TWNK. So TWNK and AMC. It's just got a lot of, the meme stigma attached to it. Unfortunately, I'm going to say it's a stigma just because it is a target of short sellers. Okay, BlackBerry's next, and this one is dying. It's very sad to see the state of BlackBerry. Okay, as this is loading, I'm going to pause it if it doesn't load. Okay, I loaded. BlackBerry is just sad to see. It was down to $3.19 back in the end of December. When I first saw this chart, the numbers, I thought it was dead. I thought BlackBerry died. This is very sad. 322 was its 5-year low, and we are pretty much at the 5-year low. Will this go right back up to 10? To even 5? I don't know. I really don't know. It's not a stable stock. I don't know what they have in the pipeline in terms of products, in terms of what they do as a business. Look at all these articles. I don't know if it will recover. I really don't. It's a big question mark. I'm going to say probably, no, it's not a solid stock. I'm just going to conclude that right now. So we've got two stocks so far. It's TWNK and AMC. We're going to look at GameStop, and then after that we'll look at my my heart, the heart of this channel, which is solid stocks, reputable stocks, profitable companies that have a rich history of making big business, making lots of profit, and they have brand recognition. So we're going to look at those stocks after GameStop. So looking at the 52-week range, we got $15 to $49. Waiting for the chart to load. There it goes. So $15. Okay, let's see. When did it hit 15? Just last week. So January 6th of all days, 1553. Is this a solid stock? It's hard to say. This is more of a meme stock at this point. GameStop is a good business, but because of the stigma around it and the short selling and all the tomfoolery, it kind of has more obstacles in its way compared to AMC, ironically. AMC really should be up there in the $20 range. GameStop, I can't say the same. I'm just not sure, because how many people are buying physical video games nowadays? Even myself, I'm more of a physical consumer. I like to own the physical copies of video games on PlayStation, Nintendo, etc. But I'm finding myself buying more digital now because there's better deals, to be frank. And if we look at the support in the last year, that was $20. But it hit $15 just this last week. In the last 5 years, you're looking at $10. So this is really being either manipulated, or I don't know. Most likely it is being manipulated. But will it rise again? I can't answer that. I think it will, but it's going to have a tough time going up, because the resistance, as you can see in this chart, as recent as 2022, 2021. Let's look at the highs here in the last let's look in the last year. Yeah, that's when it squeezed. 81. I don't think it's going back there again. 50, 40, 45. So it looks like resistance is right around 37, 40, just to be safe. It's hitting 40 quite consistently. But in the last 52 weeks, it has hit 40 back in August. Will this hit 40 again? I think it will. But 30 to 40 is pretty safe right now. It did hit 40 multiple times, once in March, and then once again in August. So yeah, I think it's a safe bet to sell this at 37 to 40. But you'd have to pick this up pretty much now, $17 and below, is just to be safe with this. Even sub 20 is pretty good. So yeah, I think it is a solid stock, kind of questionable, but because of its meme potential, it is the number one meme stock, GameStop and AMC, so it is a solid stock. I'm going to stick to my word with those two. So we're going to pause the video and look at the other solid stocks from the heart of my... Okay, we're going to look at our first possible solid stock, and that's Tesla. It was down to 101, as high as 384 in the last year. Is this going to recover? Elon Musk has been the target of the mainstream press and the big mainstream businesses, and he's pretty much the new Donald Trump in terms of being attacked. So I don't see this going up in the long term. It will. It's just, this is a big question mark. I wouldn't personally invest in this just because of the tax going on here, and he is definitely being attacked by the short sellers. This stock in particular. I did say this is going to go down, and it's happened. Finally, it happened. Just like my videos were saying, it's going to go down to what it was, $100 below, or below 130 at least. I was saying it was going to go down to these levels at 129, and it has. It finally came true. So that has come true just in the last month. Will it recover? I think it will. It's going to take some time, but the resistance is looking like probably 200. It's hard to say right now because of the attacks against him. I don't know if it's going to go right back up to 200. It could. It's going to take a lot to bring it back up again. I think when AMC and GameStop, when they recover, when AMC goes to 20 and GameStop to 40, this might go back up to 200 as well. I think they're all in the same boat, perhaps. But certainly AMC and GameStop are in the same boat. I can't say if Tesla is in the same boat, but I think there's a strong possibility it is in that group of companies that the shorts are targeting. Okay, I'm going to wait for the next chart to load. So welcome back. We're looking at Beyond Meat, and this is a cautionary tale. Beyond Meat is because it was a very good stock at one point. It was above $100. I think even above 200 at one point as well. But it has fallen, and it has fallen greatly to $11, as low as $11. Now it is at 15. This is a cautionary tale. They had a lot of opportunities to break into the fast food industry, specifically McDonald's, but that deal never panned out for them. And the mystique surrounding the vegan meat or alternative meat products has taken a tremendous dive, notwithstanding Impossible as well, although they don't have a publicly traded stock. But in all honesty, from a consumer standpoint, Impossible was the better product, and still is. It tastes more like meat than Beyond Meat. So that's a story with Beyond Meat. I'm going to say that's not a solid stock, just because its time has passed. Just like Co-Diagnostics and other stocks that are related to COVID, those stocks have their time in the sun, so to speak, has gone, and it's over. Their 15 minutes of fame is up. I'm looking at this Canadian company. I believe they're Canadian. They own a bunch of franchises. I believe Taco Bell and KFC and so on. But it's Restaurant Brands International. So so far we can only see the 52-week chart, which is 46 to 68. So I'm going to say this is a solid stock, QSR, because that industry is doing very well. at the moment. So I'm going to look at the 5-year chart if it decides to load. Let me just pause here. Okay, so if you're counting, I think we only have 3 solid stocks, and that is TWNK, GameStop, and AMC, if I'm not mistaken. And this looks like the next solid stock. The 4th one is QSR. Let's look at the 5-year. Yeah, it does have a history of bouncing back very strongly. Back in the height of COVID, 32. So you doubled your money by now. And it's been steady. It's been steady throughout the last 3 years. This is a very stable stock. So solid stock. Very much so. QSR is a strong buy. And it owns multiple companies, multiple restaurant franchises. Okay, so that's all for QSR. Moving on to the next one, which is WWE. Is that a solid stock? That company's been around for decades in terms of sports entertainment. So looking at WWE, this is a very solid stock. I've been tracking this for at least 10 years. I can't see the chart for some reason, but I remember the stock being $14 when I started tracking it, and that must be around 2012-ish. It's at $90. It was as high as $93. So this is a very good stock, needless to say. Let's look at the last year, or 5 years. So if you bought this at $33, you're almost tripling your money in a matter of just about 2 years, or 3 years. And again, I was tracking this back in 2012, and it was around $14. It was around here when I started tracking it. And I did not think it would explode this high. That goes to show you WWE is a very solid stock, so put that one up there with GameStop, AMC, and QSR, and the other one, TWNK. So these are all solid stocks. So, and the reason I'm doing this video, because these are the stocks we're going to track from now on. We're not going to track these only meme stocks. Not saying GME and AMC are not good stocks. I'm saying we're going to track these actual solid stocks going forward, because these are the companies that you want to actually invest in, because they have a track record. They've proven themselves over decades. They are recognizable brand names. That's why we're going to look at these. Okay. Next is a Canadian bank called CIBC. So let's pause here. So CIBC, there's so many Canadian banks we could look at, but this is one of the best ones because their customer service is excellent beyond the other companies, way beyond the way they treat their customers, and their policies are the greatest. There's no fees in terms of using Interac and so on, so that's why I strongly recommend this company, this bank, not really a company, but this bank corporation. And if we look at the last year, it's actually at the low point. It's closer to the 52-week low of $53. So that's an interesting development. But if we look at the last 5 years, on the other hand, it'll tell us a different story. $36 is really the true support. And the resistance is closer to, well, with banks, there really is no resistance because banks constantly grow. Let's look at the maximum chart just to prove my point. There's really no resistance. It's just higher highs, and that's it, higher highs. There's no lower lows. You don't see it going back down to $8. It never will. Well, not never, but highly improbable. So if this ever goes down to 40, and it probably won't, I think the new level of support is probably 50, 60. So right now is support. So this would be a good buy right now. And you're looking at this most likely getting past 80 and 90 and 100. It's just a matter of time. It's not a matter of a question of if, it's a question of when. Okay, so that's CIBC. Again, many other Canadian banks, but this is the best one, in my opinion, because of their policies and just very customer friendly, no fees, very minimal to no fees when you're using their banking services, when you're doing deposits, transactions, e-transfers, Interact, you're just buying something at the store. There are practically no fees. If there are any, I really don't know of them because they don't charge me any fees. These other banks do charge user fees. Just to have an account, they charge you fees, but the CIBC does not, as far as I know. So very good buy at this point in time. If I had more money, I'd buy the stock at this price. It's a good stock, solid stock. So that's another one to put up there. Okay, next is Suncor, which is an energy company. This is going to be one of the longest videos in this channel, and it's important we go through all these stocks. So the saving grace of this video will be the timestamp. So I don't recommend anyone just watch this video from start to finish. That is probably not a waste of your time, but it's very time consuming. I strongly do recommend you click on the timestamps that I will list in regards to the solid stocks. I'm not gonna put a timestamp for stocks that are not worth your time. So only the solid stocks will have timestamps. So you can skip over the non-solid stocks. Okay. So Suncor Energy is next. After this, I'm gonna pause this video because I think my alarm's gonna go off again. So 52-week range, 25 to 42. Okay, what's going on here? Let's look at the last 52 weeks. $26 as recently as September of last year. And this is an oil company, petrol company, was down at $11 at one point and hit a high of 40. So this is a solid stock as well, because it is tied to oil and gas, and it's consistently going up and down. You can count on this going right back up to 40. It seems to hit 40 very consistently. It's hit it that level at least minimum 40 5 times in the last couple decades. But this is a long hold, but you want to make sure you buy it at a very good price, which is $16. Yeah, 16, no higher than 20, I would say. Let's look at the last 5 years one more time just to see. Yeah, so it was as low as 20 and below just last year. So if you really want to jump into this stock, 20 and below. Sounds like the weather, but $20 and below. And it pretty much goes up to 40 very consistently, but this is a long hold, but a solid stock nonetheless. So put that up there as well. You're going to see a timestamp for this stock, Suncor. All right, next stock, Chevron. So this is the American equivalent to Suncor. 52-week range, 122 to 189. So it's closer to the high. Last 52 weeks, we're looking at 137 as support. Last 5 years, we're looking at, what's that, 59, okay. But this is a steady, very solid stock. So Chevron is a solid stock as well. You can count on this. It's even stronger than Suncor, to be honest, because it did hit 120. And it hit 170 and then 180. So this is only going up. It's only going higher, Exxon. Or I should say Chevron, not Exxon. So put that up with the other solid stocks. Looks like this trend is going to continue on for the rest of this video. A lot of solid stocks coming up here. All right, we've got Exxon Mobil. And support was hard to say really. $70, 70 to 80. Resistance, really no resistance. It's just going up. It's whatever price you want to sell it at. So the price of oil has gone up, or at least the price of Exxon. If you bought this back in March 2020, $38, $32, congratulations, you quadrupled your money. So another solid stock. Put that up there with Exxon or Chevron. Next is Google. See if that's a solid stock. Okay, so Google, aka, I can never say Google. Google, Alphabet. My goodness, it fell incredibly. Must have split, but I look at the support, $83 and 152 resistance. So it did fall to 83 as recently as November. Yeah, I would say this might fall even more. Support, or true support, would be 55. What does Google even do? They own YouTube, don't they? I think they own YouTube anyway. I don't see this being a solid stock. I'm going to say no, it's not a solid stock. It's a very volatile stock. It's kind of like Bitcoin in a little bit of a way. But even worse. So no, that's a pass. Next is Costco. I'm going to say it's a solid stock because people need groceries. So I'm going to pause here. Costco, probably the most famous grocery chain for bulk groceries. 52-week range, 406 to 612. Last 52 weeks. Let's look at the chart here to establish our levels of support. 422. Okay, looking at 422 as our support. And resistance is 560, 540, 520. Okay, 530 is resistance to 540. And your support is looking like 400, low 400s. Maybe even 420. This is a very solid stock. One of the better, I could even say best stocks is Costco. So there you go. Put that up there as well. All right, next is Nike. Is Nike really a must-have stock? Is it a solid stock? 52-week range, 82 to 150. Now I'm going to just throw out my bias because it's not about companies in terms of, what's your favorite company. It's about their profits. 85 is support in the last year. And looks like that is true it is true. 67 to 80 is your support for Nike. So when this drops below 80, go and snatch it up because it has a history of going up to 100 plus. And it's already at 100 plus right now. 169 was the previous high. So this is a solid stock. It just depends at what price point, what is your entry point. 85 seems to be pretty good as an entry point. But even better if you can get this at sub 70. So Nike, put that up there. It's another solid stock. And it's a name brand that's been around for ages, for decades. Meta, which is the owner of Facebook, is this a solid stock? It's a good question. We're going to take a look at that coming up next once the chart loads up. We've got a 52-week range of $88 to $328. This is a big question mark. The answer would hinge on this chart being viable. $90. So this is on a downturn. It's in a depressive state. Yes, it's not looking good. It's kind of it's in a similar position to Google. Can never say I'm gonna say Alphabet from now on, but it's in a similar position to Alphabet Incorporated. So yeah, this is not a solid stock. Unfortunately, Mr. Zuckerberg, not a solid stock that you own. Next is Under Armour, which is a very similar company to Nike. 52-week range, $5 to $17. Again, it's not about companies as in terms of, what is my preference, what is my favorite company. Personally, it's Under Armour over Nike, but in terms of stock price, that's not the case. Nike's the stronger company. Last 5 years, support is looking like sub 6. So if you can get this at $6 and below, go ahead. And this seems to go up pretty regularly above the $14 mark. But as to is the question, to answer the question, is this a solid stock? I'm going to say no. It's a close call, but Nike is the one you want to invest in, not Under Armour. Unfortunately, I'm not playing favorites. I'm just looking at the chart and going by my gut instinct. It's Nike that's going to be the winner in the end. They just have too much behind it, too many customers that are loyal to that brand compared to Under Armour. It's just the reality. Best Buy, one of the biggest consumer chains for electronics. 52-week range, 60 to 112. Right now it is at 85. So kind of in between that range. Once this chart loads, we'll get an idea whether this is a solid stock or not. 51 is the support, 50 to 60. And this pretty much goes up consistently above 100. I'm going to go against the chart looks kind of reliable, but I don't know. Best Buy is a company. I'm just going to share my personal experiences there, that I have not had good customer experiences there. So I'm going to say no, because that will catch up to them. Karma does catch up to these companies. I'm going to say, although the chart looks somewhat steady and consistent, I just don't like this company from a personal perspective, a customer service relations perspective. I think they do work on commission, so they're not very they're not like a Walmart or a Costco, and I'd prefer to put those up as solid stocks. Best Buy is not a bad stock, but it's not one I would invest my own money into and put a lot of faith into that. If I could lock in my money into a stock for 10 years plus or 20 years or 50 years, it wouldn't be Best Buy, so I'm going to pass. Okay, we're kind of narrowing down or getting closer to the end here. Looks like we've got maybe 20 to go. General Motors is next, getting into the automotive stocks. $30 to $60 is the 52-week range. We're closer to the low. We're going to see whether this is a solid stock or not. Let me just pause it. This is getting closer to an hour now. Okay, so here we go. General Motors. This chart is looking not so good. $18 is the true support, 18 to 20. Resistance is looking like, as of late, $40. So the automotive industry seems to be suffering. There was a bit of an uptick in last year or last couple years at $50 to $60, but it seems to be going through a downturn, a depression. GM as a company is pretty good, but I'm going to steer clear of this and say no, it's not a solid stock as a stock. I'm not saying they're not not saying they're a bad company. I'm saying as a stock, it's not a good investment because I wouldn't lock in my money there for an extended period of time. Target. So we're getting to the consumer chains here, kind of like Walmart and Costco, and now Target. Target 137 to 254. It is 164, so it's in between, a little bit closer to the low. This is a very lengthy video, but again, it's important we go through all these because we are reestablishing our base, our foundation as to what are the stocks we want to look at on this channel moving forward and into the future. Support is 140 and below. Resistance is looking like 180, 170, 180. Is that enough? I'm going to say no. This is not a solid stock. Unfortunately, sorry, Target. It's seeing somewhat of a depression. So I'm going to say steer clear of Target. It's not a... And it just tends to be a poor man's Walmart. If you've ever been to one of their stores, they're somewhat not as clean. They're just not as well maintained. Home Depot, I think this is a solid stock. I don't even have to see the chart. I just know it. Just from my gut instinct. Okay, so 264 to 374. And they are closer to the high. Home Depot. Let's wait for this chart to load. Take a look at whether it's consistent, whether it's stable. Support is 250, 260, even 270. And it was as low as 200, or I should say 150, which is really the true support. From an Apex investor standpoint, 150 to 170. And the true resistance, I don't know if there's really a true resistance for this. It was as high as 400 at one point last year. And the end of 2021. Will this go back up to 368? To the 330 level? I think it has a very high chance to go back up to... It already is at 300. What am I talking about? It's already there. Will this go back down? It will. It will go back down. It's a stock. Stocks go down. They go up. So this is a buy at 260, 270. And it's a sell at, right now, 330. It's a good selling point. 330 and above. So solid stock, Home Depot. Put that up there in the list, in the timestamp list. Nintendo, solid stock, because it's made me over $10,000. That was one of my first investments as a stock trader. Let's see how it's doing right now, however. 52-week range, 976 to 1365. I don't know what's going on here. Looks like there's somewhat of a depression, which might indicate it might be time to buy Nintendo right now, unless they went through a stock split. So I'm very intrigued to see what is going on here. Yeah, they're kind of suffering as of late. The last 5 years, I think the Switch came out around here, or before, right after this. So it was at 638, and then went up to 50. Yeah, it looks like it went through a stock split. So if you are to buy this, I would wait for it to drop $4 and below. If you can get this at $2.50, you're going to do yourself a great favor. So true support is $2.50. I'm going to even say $2. $2 to $3.50 is your true support. So wait for that time, because it will happen again. Let's just rewind here. This is when the GameCube came out. It didn't do so well. This is when the Wii came out. It did very well. And this is when you had the transition phase between the Wii to the Wii U, and was kind of not so great when it wasn't so good for their business. It was a good system, but let's just look at the stock. The Switch came out around, I believe, around 18, and then only recently you're seeing the potential of that system, that console. So it came out just right around here. I believe that was at the end of 2018 or 17. But this is when you buy Nintendos between consoles, right at the end of the lifespan of the console. So it has not hit this level yet. Again, this is the Wii, and then this is the Switch. So between these heights is when you want to buy it. Again, that is $2 to, at the most, I'd say maybe $5 at the most, $5, and then you sell this at $15 because it is consistent. Nintendo is one of the most steady companies known to man. Okay, it's been around since hundreds of years, the 1800s, and it's just kicking and going, and they're universally loved by everybody. Practically everyone loves Nintendo and their IPs. So this is one of the most solid stocks known to mankind, in my opinion. So buy this at $2 to at the most $5, maybe even $6. But I think you're safe at $5.50 level. $6, you're kind of pushing it, but it's still a good buy at $6. All right. So, but if you're really an Apex investor, you're gonna wait for the $2 to $5 range, which is something of a large gap, but $2 to $5. And then you're selling this at 15, or at least at what's this level here? Maybe 12 to 15. But why not maximize your profits, right? Wait for the 14 to 16 range. Why short sell yourself? Why sell yourself short, not short sell yourself? So that's Nintendo. Definitely one of the solidest stocks you could ever buy. And I'll most definitely will put their logo up on the thumbnail. Okay, McKesson is somewhat of a unknown quantity. Not everyone knows about this company, but they are a health related company. They do a lot of business with various healthcare related industries, both pharmaceutical and other. Their range is 237 to 401, and they're closer to the high. Okay. Looking at the last year, yeah, you can see they've recovered. They've roared right back up to where they were pre-pandemic. So if you look at the pandemic era here at 125, they've just stormed right back up like it was nothing. So will it go right back down again? Certainly it could. This is a solid stock. I'm going to come right out and say it because this is a strong stock. Look how it doesn't look like there's any stopping it. But I think there will be a correction at one point in the future, as it was at 220 plus, 200 plus in the 2015, and then saw a dive in the next years. In this era here, it was below 120. So the true support, if you're looking to buy the stock, that is 110. Actually, not really 110. Closer to what it was in March of 2020. So the true support is between 110 to as high as 130. Okay, so 110 to 130 if you're looking to buy into this stock, McKesson. And the selling point, the resistance point, it's hard to say because, again, this chart is so vast. But, okay, let's just put a number on that. If you're buying at 120, 130, then you're probably going to sell at 200 plus. Okay, so that's McKesson. We're getting closer to the end here. Procter & Gamble, is that a solid stock? It's a company that, it's like a mega corporation. They own multiple companies. An umbrella corporation, not Resident Evil, but a corporation that owns many other companies. So let's wait for that chart to load. Okay, so we've got 13 stocks to look at. I think I'll do a news video on another day. We'll just look at the overall state of the stock market. Again, looking at the solid stocks only, not looking at the Dow. I mean, we can look at that in another tab, so let's open that up. Procter & Gamble, 122 to 165. Let's see if there's any support in the last week, last 52 weeks. Is there a good pattern here? Okay, there it is. There's your support, 120. Long term, you're looking at 120 and lower, so 100 to 120. And this seems to go up to 150 and above consistently. But is this a practical, is this a stock that you could just buy and sell? Yeah, it is, but I don't think you're really maximizing your profits in this stock. So I'm going to say, although it's solid, it's not a solid stock to be trading. It's more of a long hold. So say you buy it 100, 110, 120 even. Will it go up to 200? I don't know. That's for you to see and to determine. So I'm going to pass on this. It's not a solid stock, although they tend to own a lot of companies. We'll just pause this video once again. We've got 12 more to go. Okay, as I was mentioning the state of the stock market as a whole, the Dow Jones itself, 28,000 points to 35,000. This is very misleading because a lot of stocks are suffering, especially the retail investor stocks that a lot of people are buying, that are holding into different companies. It was down to 28,000 points as recently as September 30th, 2022. So we did see somewhat of a mini crash, but it crashed even harder very clearly in March of 2020 when it sank at 19,173 points. But now we're looking at what I spoke about when I was uploading videos more frequently, when I predicted a stock market crash, but it's not a typical crash because it's not going to be observed or noticed simply by looking at the Dow Jones and the S&P 500. It's not going to be observable using those metrics. It's going to be observable if you're only looking at the individual stocks themselves, because this is being, the crash itself is being masked by stock manipulation and just overall, maybe even this number is being manipulated, to be honest. I mean, there's no, I'm not going to put it past the Dow Jones and all these, metrics that they're being artificially inflated in order to hide the reality, or I should say the sad reality, that a lot of stocks are at all-time lows and are not what they should be at. They're not valued at their real value. Okay, we've got 12 stocks to go to determine, are they solid stocks, and what are the stocks we're going to be tracking moving forward from now on in terms of solid buys. Okay, Coca-Cola Company, we've got $54 to 67. So I feel like I'm giving away all my secrets in this video, but that's good because I want people to invest in companies that are solid, that are trustworthy, that have a history of making people money, of making profit. And you can almost, head to the bank and just bank on it that these companies will make you money if you buy at the right price, that is. So true support for Coke is $38 to 48. hard to say really, because this company is so stable and only hits higher highs, does not get to lower lows. So it is a tough thing to say. I'm gonna say, although it is tough to determine what is true support, I'm gonna say $50 in the short term, and the resistance is 65. So this is a good stock. Although it is solid, I'm going to pass on it simply because it's not a stock where you can maximize your money. You can't really maximize your profits if you're flipping this between 55 to 63, unless you've just got a ton of money to throw around. So it's not a stock that will help you to grow your portfolio unless your portfolio is already worth $1 million and above. So no, it's not a good beginner stock in terms of growing exponentially. So I'm going to pass on Coke because of those reasons. Okay, so we've got 11 to go. Let me pause once again. All right, so this is the home stretch. We've got Nissan Motor Company. We've got a 52 week range of 581 to 1120. So we are right at support levels right now. Once again, the automotive industry is seeing a depression of sorts. Has not been this low since March of 2020, so this could be a good buy at this point in time. Historically, Nissan has seen better days when it was up at $19 and above. So in the long term, this could be a very good stock at this price, especially since it is at this sub $7 price. I do believe it'll go above $10 in the near future. So this is a long hold, and that's a good price right now for Nissan. So I'm going to say Nissan has been historically a cheaper stock compared to other automotive stocks. So this is a solid buy. It is a solid stock at this price. It just might take a long time for you to see it get above to levels you want. But as recently as February of last year, it was at above $10. You just might have to wait a little longer. Is it reaching higher highs and lower lows? Let's look at this line here from 1994. Yeah, it's pretty consistent. I think it will eventually rise above the, what is that line there? It's showing $14, $15. So I think, not that it's a guarantee, but it's very close to a guarantee that this will get to $15 in the future. Because look at these depressions here, 494. You've got this value here, 606, and then you've got where we are right now, presently at below $7. So I do see this recovering unless Nissan goes bankrupt tomorrow and they just disappear from existence, but that's highly improbable. So for that reason, Nissan is a solid stock. So I'm going to put that up there among the solid stocks. Dollarama is a Canadian-based dollar store, essentially. And a lot of people are going there, especially in this economic climate. People just cannot afford to go to their regular grocery stores with their inflated prices. So you have a $60 to $85 range, and it is closer to the high. And they just seem to have stores popping up everywhere in all sorts of locations that you wouldn't expect to see a Dollarama open up. Okay, and this chart is not loading. Let me pause. Okay, we've got our last 10 stocks, and Dollarama is the 10th. So moving forward, I want to do at least one video per month. I don't want to raise expectations too high for this channel. They say I'm going to do a video a week, or even a video per day or every other day, because the nature of the stock market is it's not a good idea to be tracking it every day and to be stressed out about it. The long game is really where it's at. $31 is your support. 31 to 40. In the last 52 weeks, we have seen it gone down to 60. And it looks like this company is only reaching higher highs, not lower lows. So true support might not even be what I just said, 30 to 40, because it might not go down to those levels again. Maybe even 50 would be support. So this is a solid company and a solid stock. It's been around since 2009. It's a solid stock. Yeah, so put that up there as well. Ford Motor Company. Another automotive company, obviously $10 to $25, and I expect to see this in a depression state, depression price. Is this a solid buy? I'm going to say no. I've never invested money in Ford, and I don't plan to. Walt Disney Company, aka DIS. Is this a solid stock? Do you want to buy into this? 84 to 157. It's seen better days, so we're closer to the low. In the last 5 years, we can see we're still closer to the low at 86. And at the height of COVID, it was at 85. So this is actually a pretty good buy at this price point. You want to get this at 90 or below. And I do see this going right back up to 120. It's not going to take too much. It's going to go right back to 120 and plus. Perhaps even to $200. But we'll see. Because they seem to own everything, including Fox, including Marvel, including Lucasfilm, and many other franchises, including Avatar, obviously, which is owned by Fox. And so this is a good buy. Disney is a solid stock. Whatever your opinions are, it's just they're a profitable company, and they've been around for, it seems like a century or longer. 1985, they started trading at sub $5. So true support looking like 90 and below, and we are at that level right now, so that's a good buy. And it's going to go right back up to 120 and above. So put that up there. The Walt Disney Company as a solid stock. I just think it's being attacked in the media right now. So that might be owing to its lower prices, or maybe perhaps it's the Disney Plus subscriptions not being as good or as high as they would want. However, their box office success is looking good on them. Toyota Motor Company, Corporation, 130 to 209. 5-year chart, 116 is true support to as high as 130. So we are closer to 130. Will it go back up to 160? I think it will. It's not going to be too hard for it to go back up. Toyota is a solid company, one of the best automotive manufacturers on the planet. So I have full faith this will recover to at least 140. It's not going to take a lot. Actually, it's already at 140. I mean to say at let's look at this peak here, 170, 160. Yeah, 160 is it's a safe bet. We'll get back to 160 and above. Toyota is a solid company and a solid stock. So I'm going to say this is a solid stock. It's a good buy. If you are into automotive companies, so 130 and below is your support. That's where you want to buy this, and then you want to sell it at 160. Not a lot of money or profit to be made there, but solid company. So you've got Nissan and Toyota, and let's see if Honda will join their ranks as a solid stock. We've got $21 to 32. And this chart's being a little stubborn. So again, Honda Motor Company Limited. 52-week chart, we're looking at $20, 22 and below. We're closer to support right now. Last 5 years, specifically looking at the height of COVID, $20 and below is your support. We are very close to that. Just in the last month, I believe it hit, it says right there, 22.35. So that was the buy point right there. And this will certainly get right back up to 30 minimum, 30 and above. So that's a solid stock. Yeah, put that up there, HMC. We're closing out here with the last 5 companies, probably some of the strongest companies on this list. Netflix, 162 to 526. It's somewhere in between that range, so it's a healthy stock and has been one of the surprise hits in the last couple decades in the stock market. This is a solid stock, unquestionably solid. They've become something of a movie studio. They've got a lot of money behind them, and they're producing their own movies, as you probably know. So what is the entry point for Netflix? It would be easy to just say 162, but we really need to take a look at this chart first. So 160 to 170 looks like a good entry point. Really reached low lows here. 160, okay, you know what? Sub 200 is actually a good price. Yeah, sub 200 is a great buy. And to be honest, even looking at this historical chart, 200 is just about right, 200 and below. So that's your true support level, and your resistance is looking like 400 plus. Will it get right back up to 690? It remains to be seen. However, 400 is very much in the cards for this. I think 400 is very probable, highly probable. So put Netflix up there as well. Got another solid stock for you. Apple, 124 to 179. Apple seems to be a perennial company that just does not go out of style. Well, ever since Steve Jobs returned and then jump-started that company back to life again. And now you have Tim Cook currently presiding over that company. Let's take a look at Apple. Is this a solid stock? I'm just gonna go with my gut instinct and say yeah, it is a solid stock. They're going to be around for decades longer, possibly centuries into the future. But let's just look at what is your entry point for what should be the entry point for Apple. I could say 120, but let's look at the chart once again to rule out any. Okay, here we go. 130. 130 and below is your entry point. We are very close to entry. But true support is 62. So sub 70. It's your true entry point. I don't know if it'll go below that again. This is a strong stock, as you can see, very stable. You know what? I'm gonna go out on a limb and say 100 is true support. So 70 to 100. If you can get this between 70 to 100, that's your entry point. Resistance is looking like 170, 170. There you go. That's your selling point, 170. So buy this between 70 to 100, sell it at 170. There you go. Apple's a solid stock. And we've got the last 3. Amazon, Walmart, and McDonald's. Gonna end it with McDonald's. 81 to 170 here. I'm kind of surprised Amazon is this low, but that must be because the people are going back to work and so on. Things are normalizing again. 89, yeah, so will this go back up to 180? I don't know. I'm not sure. I think it has a high probability of going back up to at least 120. So buy this at 80 to 90 and sell this at 130 plus, because it was above 150 for practically 2 years, or 3 years to be more precise. So again, yeah, that's a solid stock. Amazon is a solid stock, solid company in terms of its numbers here. So once again, your entry point for Amazon is 70 to 90. And you just had that level not too long ago, just as recently as December and earlier this month at 82. So good buy right there. That's a good buy. But it's already at 98, so you missed the boat. We missed the boat there. But we didn't miss this stock. This stock is good. Amazon. Second last stock, Walmart. Okay, we're getting closer to an hour and 40 minutes. Again, don't watch this video from the beginning to the end. It's not advisable unless you have a lot of time to waste, but it's much better if you just click the timestamps. So Walmart, 117 to 160 in the last year. So that is looking like the support. 120 to be exact. So anywhere between 100 to 120. 100 to 120 is your entry point for Walmart, and your selling price, your resistance, is 150 and plus. Because it has hit 150 multiple times. 1, 2, 3, 4, 5 in the last 3 years. So you buy that or this at 100 to 120 and you're making a profit roughly of $30. 30 to 50. Walmart, solid stock. No question. Gonna be here probably forever. That company. McDonald's, probably the solidest stock known to man besides Nintendo. And solid company as well. I'm not saying they're the healthiest food. I'm just saying as a company, they've been around and they will continue to be around. You got 217 to 281 as your 52-week range. Support is looking like 220. Make that 150. 150 to 230. It's only reaching higher highs, so if you can get it as low as 150, congratulations, you're going to be a millionaire. But if you are going to buy this in the short term, then 230, you could do a lot worse than 230. I don't see this going down. It's only going to get higher and higher. This is a growth stock. It is going to the moon. It's only going to hit, it's going to go to 300 eventually. It's a matter of time. It's not a matter of when or if. It's a matter of when. But in the short term, if you are wanting to invest in McDonald's, support is looking very clear at right there, 200. Let's look at that again, 220 to 240. 220 to 240. And this is only going to go up, so you eventually make a lot of money with this stock. So that's all for this video. These are the solid stocks. These are the most stable, trustworthy, reputable, profitable companies that I've seen after looking at all these hundreds and hundreds of companies in the stock market. These are the as close as you can get to a sure bet in the stock market. So with that, thank you very much for your time. Please like and subscribe. Please like this video. Please subscribe to this channel if you have not already. I do plan to come out with a video at least once every month to check on these specific solid stocks, which I've listed in the timestamps below. And we'll continue to track these stocks moving forward and into the future. Thank you again for your attention, ladies and gentlemen. This is Apex Investor, and we are back, baby. And I'm going to do a news video sometime this week just to see what is going on with these companies, and in particular metamaterials, and just to see what has gone on there, or what is going on in terms of the future and what has happened in the last year since I've been inactive. And just thank you for your time. We'll catch you in the next video.